Hey all, welcome to Share Trek. This is Raj here, and friends, it's again the weekly spotlight, and we have Sandeep with us. And today we are going to record a very fast video because we got so many places to go for Diwali. So Sandeep has also got a very busy calendar. We're going to talk about PACB today. Let's get started. Welcome back, friends. So we have Sandeep here. Sandeep has done some work on PACB at the request of one of our subscribers and members, Jesse Isaacson, I think, and we're going to do PACB today. So Sandeep, you can carry on, and in the end, I have a few things to add once you're done. So off you go, Sandeep.
All right. Hey, everybody. Hey, Share Track friendos. First of all, to everyone celebrating Diwali out there, happy Diwali. I wish you all much prosperity. May light ward you from darkness, and may everyone out there just live well and be well. We also had Remembrance Day and Veterans Day, so thank you to all the people out there who are in the armed forces or have been in the past. So thank you, everyone. Happy Diwali. And now let's talk about something very exciting. A genomics company that Raj has talked about a lot in the past. A lot of people are really excited about. So let's break down a little bit of this excitement, see if it's warranted or see if there's something to be concerned about. And that company is PACB, Pacific Biosciences of California. So initially, when you take a look at this company, you start to think, this is a money-losing company. There's not much here. It's going to get ignored. But when I took a look at the earnings, when I took a look at some of the fundamentals, gotta admit, I was pleasantly surprised and also happy to see what Pacific Bioscience is doing. So they just reported their earnings about a week ago, and their earnings, they were expecting a loss of about 30 cents a share. They reported a loss of 27 cents a share. That is really good. And then looking at their forecasted EPS, now this is per year. Each quarter, they're looking at decreasing their loss by about a cent, by about a penny per share. But their end of the year expectations of EPS are looking very nice. I'll show it in just a wee bit, but talking more so about their revenue, this is the first quarter that PACB has reported revenue of greater than $55 million, which is amazing in a market where so many people, so many companies are saying, hey, we're losing money, we're losing revenue. They reported one of their greatest quarters ever. Now, that represents about an increase of revenue of about 17%, which also but they also had an increase in cost about 15%. I like to see that their revenue is increasing more than their cost. Breaking down much of their costs, a lot of that cost attributed to this company that they bought called, pardon my pronunciation, it's a company that deals with optics and image processing called Upton. And because they purchased that company, their loss was a wee bit higher than that, and they reported that over multiple times. What was surprising about this purchase by PACB for Upton is it was written here that the fair value for this company was about $18.5 million. They purchased it for about $200,000 in cash and $76 million worth of stock. And that was very odd. Maybe they didn't have a lot of cash at the time and they decided to do this very odd stock purchase, but they have it now, and it's going to, from what I see about the company, it's going to really diversify and increase the value of PACB. Now, their losses lowered from 69 million to now 66 million, and I will show it right here. They have cash, and I value cash a lot in this market, of $388 million, which is greater than the prior quarter. A lot of that was due to some share dilution. I see here that they did a share offering earlier on in the year, which raised about $175 million, but that was more than enough to fund a lot of their operations. I did a little bit of math and digging. They have enough cash today, if they were to continue burning at the current rate, to fund operations for about a year and a half. And they plan to become even more efficient and decrease a lot of their spending and decrease a lot of their costs while increasing revenue. This is very nice. I mean, looking at this, looking at some of these metrics and looking at some of the valuations, I am impressed with PACB and how it's able to become much more efficient. The company is still a money-losing company, and there are a lot of alarm bells. Like, first of all, it has about $200 million more in enterprise value than market cap, which means that their debt owing is greater than the amount of equity they have. And that's something alarming, but it's got enough cash for operations, and it's getting much, much more revenue per quarter. It's thinking it's going to become much more profitable during a time where so many companies, except for some of the really big names like Microsoft, are saying, hey, we're seeing some troubles in the market with revenue. This company isn't. It didn't talk about the macro and inflation very much, because I think it's not really that much of an issue right now. And very interesting enough, ARK Invest bought some PACB just recently. Another thing I'd like to show off over here is this wonderful company, NASDAQ. It's the same wonderful NASDAQ company that does a lot of the reporting. What I love about this site is it breaks everything down really, really easily and easy to understand. Like, you see that their earnings, the estimate was 0.27. Pardon me. The forecast was 0.3, and they had an actuality of 0.27, which is great. And you can see that their earnings are actually the future projected earnings by Wall Street over here, what it's going to be like in the future, what it was in the past, and what their next quarterly earnings are going to look like. It's just nice to have all this organized. So check out NASDAQ. It's a good resource, in my opinion. So what do I think about the company financially wise? And then we could bring Raj and talk about the pipeline. This company is trading a little rich in terms of price to sales. Its price to sales is about 9, but looking at the company and looking at where it was before and where it is today, it's at one of the lowest points it's been in a while. And now it's reporting one of the best quarters in a while. And it has enough cash to fund operations for a year and a half. At some point, value is going to have to be recognized, and there might be a lot of value in Pacific Biosciences of California. When the market realizes that value, I can't tell you, but financially, if interest rates don't continue to go up, and in the future, if interest rates were to come down, I think this company might have a shot. It might have a future. And they don't another small little point is, I love the way this company reports, because it reports its dilution as if the dilution already happened. Like, they have about, got the number right here. Pardon me. Yes, they have a whole number of convertible notes, and they kind of said, all right, we're going to report this as if they have already converted. They're very diluted, which is lovely to see. I don't have to do the math myself. The company is, I like seeing this. Is it cheap enough for me to buy today? That's a valuation which I'm going to have to consider. Is it cheap enough for you? This company is going to come with a lot of risk because it is a money losing company, but I like what I see. So, Raj, do you mind coming back and telling us about their pipeline and seeing, now that you know that they have enough cash for a year and a half, can we see something in their pipeline which will make us even more optimistic?
Well, thanks, Sandeep. Here are my thoughts on PACB. Basically, I think the EPS, which was expected at minus 0.289, came in at around minus 0.286, which is 10% better than expected. So that's a positive. And likewise, in revenue, it came at least 14% better than expected at 55.69 million, which is almost 7 million more than the street expectation. So that's a huge number. And this was a bullish catalyst. However, the share price kept falling. I mean, if you look at the trading view and look at the share price for PACB, it fell because even though the company did not provide a formal 2024 guidance, they indicated that 2024 will be challenging. And the market is waiting to hear formal forward estimates for 2024. I think till such time it will languish. Then the question is, if the performance is so nice, why is the price dropping? I think that the reduction in gross margin is something that concerns the market, but they are not keeping in mind that the Apton purchase might have impacted the balance sheet and the accounts of PACB. So right now the market is pessimistic about PACB, and in their Q3 report, I think the main story they were harping about was the ramping up consumables revenue from Revio customers, not only in US, but also in China. So the Chinese growth was not that great, but it was still positive. So that was a good thing. So consumables revenue for the third quarter of 2023 was around 18.9 million, up almost 4.9% from same time in the previous year. And it also exceeded what the street expectation was. So all said and done, that was also a good performance. And if you look at the amount of units they shipped 52 Revio sequencing systems in the third quarter. And this brought the total installed base to 129 Revio. And that 129 will cause a lot of consumables in the next quarter. So I think that's another positive. And the company also shipped its first Osno short read sequencing system. I think in the next quarter, we'll start seeing the revenue of the short read sequencing system also adding on to the overall revenue, and it'll be a better mix, long read plus short read. And I think the cash balance was 767.8 million as compared to 829.9 million at the end of second quarter. So this when I look at the overall picture, I think that in a way PACB is improving, because while Illumina is having its own problems, but Illumina has got a scalable platform. Now, with the Osno sequencing system already in the market and having sold and delivered the first one, I think PACB is getting into a very good position for the combo. And the Apton systems that they bought also helps with the high throughput short read sequencing. And they are going to integrate that with the SBB. So they are expecting more superior products going forward, which will mean higher revenue and a larger installed base going forward. So everything is there to like. And Sandeep, as you pointed out, right, will you put your money in this? Of course, there is a lot of risk that is out there. And the future dilution of equity is also to be considered. That could also be something that is pushing down the share price, because when there is equity dilution, the share price falls. So all those things are there. And if I was to give a conclusion, I would say that there'll be better opportunities in the market than PACB. If you really have to invest, there are other venues. But if you have to be in this market, I think the genomic sequencing market is in a funk, because Illumina is doing really bad. PACB is not doing very well either. And all these companies are loss-making companies. There are profitable companies where you can put the money and also get a dividend. So I would say that don't be absolutely focused on genomics and genomic sequencing companies. Have an open mind, because if you put all your money and the kitchen sink into one sector, you're not diversifying. You're increasing the risk that that the market is able to throw at you. So diversify and buy to dollar cost average. That's what I would think. And these are my personal opinions, not financial advice. And same for Sandeep also. It's his personal opinion and not financial advice. So do your own due diligence, but you know that what Sandeep and I think about. So is there anything you want to add, Sandeep?
Oh, thank you for providing that insight. I'm very happy you provided some flesh and meat to that bone. That's great addition, great insight. So thank you. And the only thing I want to add is happy Diwali, and these shares come with a risk. So consider that and consider what we said, but think about it yourself. Go and look at some of these statements. And if you want to ask questions, feel free. The comment section's there for you. And we are welcome to hear you and hear what you'd like to hear about next.
Yeah, you can make your request for the next company that you want us to profile. I think we already have one request which we have in sequence.
Caribou,
so any more request is always welcome. So with that, I would like to end the video here. A big thanks to Sandeep once again for sparing his time and helping us do this weekly spotlight. And thanks to our viewers and subscribers who have requested us for these reviews. And we are very fortunate to have you in our midst.
Yeah.
So thanks a lot and have a great day. Bye for now.
Bye, everybody.